On today's CoinMarketCap episode, we will discuss the current state of crypto in the United Kingdom and whether it's a future crypto hub or a failed economy. The United Kingdom's economy has not exactly been a shining example in the past year. High inflation rates and rising interest rates has resulted in a projected recession in 2023, with the economy expected to shrink 1.3% according to KPMG. The back-to-back challenges placed the UK under great strain and also forced the government to enact more than a few controversial policies to get it back on track. But despite a turbulent last quarter, the UK actually appears to be moving in the right direction. And with the new leadership and a change in strategy, it could actually be on track to separate itself from the other G20 countries. In terms of crypto adoption, 6.2% of Brits actually own cryptocurrency, according to an estimate by AAA. Meanwhile, Chainalysis' 2022 Global Crypto Adoption Index places the United Kingdom at 17th and is only one of two high-income countries in the top 20, the other being the United States. The country is now set to embark on a major push to not only restore its economy, but also reinvent itself as a global crypto hub, potentially multiplying its crypto tax revenue and importing a host of new talent. But will it work? Well, we have to talk about the collapse of the pound sterling. So the GBP has been on a negative trend against the USD, losing over 40% of its value since 2007, after it hit a record high of 2.06 GBP per USD. This downtrend accelerated dramatically between June of 2021 and September of 2022, during which the pound lost more than 26% of its value against the dollar in 15 months. Ouch. Owed to the bungled execution of Brexit, sustained political turmoil, hiking interest rates, energy crunch, and also the poorly received and now largely scrapped mini budget, the pound has seen its purchasing power and relative value tank. Like most fiat currencies, the British pound sterling has been crushed by the US dollar in recent months. Indeed, the USD has actually gained 12.98% against the GBP over the last year, which places it among the top 4 G10 currencies against the USD. And for comparison, the USD gained just 2.15% and 4.51% against the Swiss franc and Canadian dollar, respectively, in this time. The recent collapse of the sterling also led to a spike in GBP to Bitcoin trading volume, sending it to a one-year high in September of 2022. As per published by Kaiko, Bitcoin GBP trading volume actually spiked as traders looked to profit from the volatility of the GBP or escape inflation. England welcomes new Prime Minister. On October 20th of 2022, former British Prime Minister Liz Truss resigned from her post after just 6 weeks in office, becoming the shortest-serving Prime Minister in UK history by a wide margin. This came following weeks of controversy and political turmoil surrounding her now-failed mini-budget.
Parts of our mini-budget went further and faster than markets were expecting.
Just days later, Rishi Sunak actually was welcomed into office as the 5th Prime Minister in the last 6 years and the 3rd this year. This was largely seen as a boon for the UK economy, given Sunak's independent success as a businessman and long storied history as a Member of Parliament. Immediately following his appointment as UK's new Prime Minister, the pound sterling began to reclaim some of the losses it incurred while Liz Truss held the post. With a new plan to rescue households, bolster the economy, guarantee wages, combat inflation, and inject new capital into the economy, Sunak is now charged with ensuring its revival. As a vocal advocate of blockchain and crypto, Rishi Sunak is seen as a crypto-friendly PM. During his post as Chancellor, Sunak said, "It's my ambition to make the UK a global hub for crypto asset technology, and the measures we've outlined today will help to ensure firms can invest, innovate, and scale up this country." Sunak is now likely to introduce a financial market infrastructure sandbox, which will allow firms to explore the use of blockchain technology and push innovation in the sector. Last year, Sunak also proposed a UK central bank digital currency known as Britcoin. Yes, Britcoin.
With all due respect, what the are you talking about?
2025 was set as the launch date for the CBDC, but as of yet, the UK central bank has not made the decision to introduce a digital currency. Tax changes and turbulence. In September of 2022, the UK's Chancellor of the Exchequer, Kwasi Kwarteng, delivered the not-so-mini budget, which was designed to tackle the cost of living crisis and boost the economy by cutting taxes, scrapping several planned levies and also tax hikes, freezing energy bills, and introducing several new investment zones around the UK. Just weeks later, almost all of the tax cuts put forward in the mini-budget were scraped following a dramatic government U-turn. This caused significant political unrest, while news emerged that the government may reduce reduce the income of tax thresholds, helping it raise more money to actually restore the economy. The UK now has the third highest inflation rate in Europe at a 40-year high of 10.1% as of September of 2022, just behind Belgium's 11.27% and the Netherlands' 14.5%. To put this into perspective, the average rate for the euro area or eurozone sits at 9.9%. Right now, the UK does not exactly stand out as a crypto haven. Crypto gains are taxed at the 20% capital gains tax rate, and businesses do not benefit from a particularly favorable crypto regulatory framework, since this is largely aligned with the EU's 5th and 6th anti-money laundering or AML directives. But with a new prime minister now in office, the UK might soon get the boost it needs to separate itself as a global crypto hub. According to a comprehensive roadmap laid out back in April, the UK has a multi-step plan to help position itself as a global crypto hub. Some of the measures set out in the plan include number 1, creating regulations that make stablecoins a recognized form of payment. Number 2, introduce a crypto asset engagement group to work closely with the industry and tackle issues facing the crypto asset sector. Number 3, potentially improving the competitiveness of the UK tax system to help foster growth. And number 4, working with the Royal Mint to produce an NFT for Digital Britain. Further, in October this year, lawmakers have voted in favor of adding cryptocurrencies termed digital settlement assets into the proposed Financial Services and Markets Bill, which would seek to regulate crypto as any other form of financial instruments. This includes stablecoins, which are believed to have the potential to develop into a widespread means of payment. Should the government execute these measures quickly, it could find itself a hotbed for crypto innovation, competing directly with crypto-friendly countries like Georgia, Malta, Singapore, Portugal, and the UAE. But it will need a substantial overhaul of its crypto taxation rules to stand a chance of becoming a real crypto hub, given that many countries tax crypto profits at 5% or less. With the seemingly consecutive implosions in crypto this year and potentially fraudulent activities from the likes of FTX, the UK is seemingly more certain about the need for greater clarity and scope of regulation, which they believe will allow innovation to thrive while protecting consumers and businesses. Echoing this, Minister Andrew Griffith mentioned that there are questions about the future of crypto, but we'd be foolish to ignore the potential of the underlying technology. The UK is certainly not ignoring the cryptocurrency industry. The government is consulting on a world-leading regime for the rest of the crypto asset market later this year, but only time will tell if and when the policies implemented will be effective.